Stacy Johnson here, CEO of MoneyTalksNews.com, here to answer your question of the day. This one comes from Carrie or Kari. My 401k has made a lot of money over the last few years, but now I'm getting concerned the stock market is too high and might crash soon. Should I get out of stocks? I remember, gosh, I don't know, maybe about the year 2000, 2001, I was sitting on a news set and the anchor asked me, is the stock market going to go down this year? It had just gone up like 20% the year before. And I said, likely, probably will. She said, well, how do you know? I said, because the stock market always reverts to the mean. The stock market over long periods of time goes up about 10% a year. So if it goes up 20% in 1 year, odds are that sooner or later, it's going to have to come back down to make those averages still make sense. Now, the stock market just went up 20% in the last year. So is this logic good? Should you get out of stocks? I actually did sell about a tenth of my portfolio a couple of months ago. Yeah, so I took some money off the table. Why did I do that? I did it for the same reason you should. I rebalanced my portfolio. In other words, take your age from 100. Let's say I'm 60. I'm actually 62, but let's make it simple. I take 60 from 100. What I'm left with is 40. That's the percent I should have in stocks. Now, that's just a rule of thumb. But if I'm supposed to have 40% in stocks and the stock market's gone up so much, maybe I've got more of my savings in there than I should. So what I did was I took some money off the table to rebalance my portfolio so that I'm not too exposed to risk. So it may make some sense for you to do the same thing. If you've got more in stocks than you're comfortable with, this might be a good time to ring the register and take a little bit off the table. But now, after saying that though, let me tell you a couple of other things. First of all, don't try to time the market. Yes, the market does look high, but you know what? I thought the market was going to crash after the election, and it didn't. It went up 20% instead. So had I followed my instincts, I'd have been standing on the sidelines. I'd have been in the dugout, unable to get a hit. So I'm always in the market, no matter what I think. I just don't want to be too much in the market. One final point I want to tell you is sometimes, and this is a good time to do this, you may not want to lower your investment, but you do want to lower your expectations. The market just went up 20% last year, folks. It's highly unlikely it's going to go up 20% this year. So I'm expecting corrections in the market. Maybe not immediately. I think the market looks pretty healthy right here. But sometime during the year, or maybe even next year, I'm expecting a really healthy correction in the market. I'm lowering my expectations so that I'm not freaked out when that day inevitably arrives. And I'm keeping some powder dry so that I can come back in and maybe purchase some shares at bargain prices. Make sense? Does to me. Why don't you guys see me? I'll see you next time. But in the meantime, if you want to ask a question of your own, all you have to do is subscribe to the Money Talks newsletter. You can do it on our homepage. It takes 5 seconds. And then hit reply to that newsletter and ask your question. Simple as that. See you next time.